Hello everyone and welcome back to another installment from our series Straight from the Horse's Mouth. Things such as green finance, green bonds, sustainable finance, sustainably linked loans are a hot area of financial lending, and it's one with the most potential for positive impacts around the world. Sustainable finance refers to things such as loans that encourage organizations to adopt sustainable practices, both environmental and social. Find out how green and sustainable finance can help your business work towards its sustainability goals. Here's a sneak preview.
So the focus on sustainable finance is actually nothing new for the global investment community. The Principles for Responsible Investment was established way back in 2006 with the backing of the United Nations. In its 2020 sustainability report, BNZ announced a target of $10 billion of sustainable finance by 2025 and reported on two $500 million green and wellbeing bonds they'd arranged for Kanika Ora, the New Zealand government state housing provider.
Another reason is because the SLL provides support for initiatives that we want to take forward, and it provides support for the whole ESG aspect of the business. So what I mean by that is that if we meet our targets, we get a discount on our loan. If we do not meet our targets, we're penalized for that. So we actually pay more for our loan. Looking at it globally, it had to be something that we could easily verify, because obviously with the loan and the verification process, if you are verifying certain targets, everything costs money. So we had to make sure that it was something that could be easily verifiable. But I think the hardest part was making sure that it was measurable.
This webinar will discuss thinkstep-anz's work with Sudima Hotels. thinkstep-anz provided a second-party opinion for Sudima Hotel's sustainably linked loan, which includes ambitious targets for social, cultural and environmental performance. Sudima are the first hotel group in New Zealand to be awarded the Toitū Carbon Zero certification. With that, let's get started.
Okay, kia ora tātou katoa, ko Penigen te manga, ko River Air te awa, ko Malamtan te roto, ko Air New Zealand te waka, ko te manukanuka o Aotearoa te marae, ko Ngāti Irangihi te iwi, ko Freya te tangata, ko Martin Aho. Martin Frey, Head of Strategy and Impact, New Zealand for thinkstep-anz. Hello, very warm welcome back to our webinar series, Straight from the Horse's Mouth, insights from the experts in 30 minutes. Today, we're joined by Kanika Jhunjhnuwala from Hind Management, the company that owns and operates the Sudima Hotels chain. It's great to have such a big audience today, and some of you might not know us. So just a couple of words about thinkstep-anz. We are passionate about enabling organizations to succeed sustainably. We help with detailed studies like materiality assessments, green finance, carbon footprints, life cycle assessments, and environmental product declarations. So our guest today, Kanika Jhunjhnuwala, is the Executive Director, Sustainability and Environment at Hind Management, or Sudima Hotels. Kanika has been instrumental in creating and embedding the environmental, social, and governance strategy in Sudima Hotels. She's building a process for each site to measure and report on metrics to keep the business transparent, accountable, and on track to achieving its goals. She's also streamlining processes to reduce complexity as the business evolves and grows. However, I'll start with an overview of green or sustainable finance. What exactly is it? Is it new? What's involved? How does it lead to positive outcomes? And then Kanika will provide a unique perspective of an organization that has gone through the process, talk about some of the pros and cons and the learnings of actually setting up a sustainability-linked loan. So the focus on sustainable finance is actually nothing new for the global investment community. The Principles for Responsible Investment was established way back in 2006 with the backing of the United Nations. So members of the PRI adopted 6 principles. There are 2 in particular that I'll touch on today. Firstly, this incorporation of environmental, social, and governance. So the E, S, and G, incorporating those into investment analysis and the decision-making process. And secondly, seeking appropriate disclosures on ESG issues by the entities in which they invest. So a kind of two-pronged approach, thinking about ESG when they're making the investments, but also the requirement on the organizations to actually report and report on impact. And those are two fundamental principles for green finance. Here in Aotearoa, New Zealand, we have our own Toitu Taihau Centre for Sustainable Finance with the purpose of accelerating progress towards sustainable and equitable financial systems in New Zealand. And in 2020, they launched a roadmap to 2030, covering 3 focus areas of galvanizing leadership, building capacity, and changing norms and standards. And I highly recommend their website as a source of information and resource for those looking at sustainable finance, particularly here in New Zealand. So one of the key questions is how to link the finance to the actual outcomes, both in terms of a return on investment, but also on the environmental and social and governance impacts. What actually needs to be measured to verify those outcomes and impacts? Currently, there's a huge amount of guidance being created globally with specific taxonomies from the European Union and elsewhere. And these not only inform investment decisions and reporting requirements, but are also likely to be incorporated at high level in trade agreements. So there's a really important consideration, particularly for New Zealand and our exporters to those global markets. And there are some differing opinions on what should be reported. The International Sustainability Standards Board has created a draft taxonomy for a global sustainability baseline for ESG reporting. And that is over 200 pages in length and covers every aspect of ESG and every sector that you can think of. At the other extreme, a recent article in The Economist suggested that the only thing we should worry about reporting on and measuring is carbon. Thankfully, our own external reporting board is taking a more robust approach to climate-related disclosures. And we've covered that in one of our recent webinars. But it's not just about carbon. It's actually about climate change and the impacts of climate on organizations in different parts of the world, but also the risks and opportunities that climate change presents to organizations in the future. So according to a report that the ANZ produced in July this year, the total global sustainability debt market now exceeds $4.9 trillion US. But it's not just for global investors and borrowers. Australia's National Australia Bank has been issuing green bonds, funding projects like renewable energy since about 2014. Here in Aotearoa, New Zealand, we've seen significant growth in sustainable financial instruments. Whilst working for Mercury, I was involved with both the ANZ and BNZ into climate bonds. So bonds with specific climate change outcomes where the proceeds of those funds were to be used to build new wind farms. So a clear link to renewable energy, reducing emissions from energy generation. In its 2020 sustainability report, BNZ announced a target of $10 billion of sustainable finance by 2025 and reported on 2 $500 million green and wellbeing bonds they'd arranged for Kainga Ora, the New Zealand government state housing provider. ASB has a specific focus on rural sustainability loans, and both the ANZ and Kiwi Bank have offerings for small businesses and products for homeowners focused on healthy and energy efficient homes. So green finance essentially has become available for all, not just large organizations, but actually for individuals and families. But how has green and sustainable finance actually been defined? Well, in our thinkstep-anz online glossary, we refer to it as loans and other financial products and services that encourage sustainable practices for the customers and industries they fund. A global definition has been jointly created by the Loan Market Associations of London and the Asia Pacific, and the Loan Syndications and Trade Association based in New York. So they define sustainable finance as any type of loan instrument or contingent facility which incentivizes the borrower's achievement of ambitious, predetermined sustainability performance objectives. The borrower's sustainability performance is measured using predefined sustainability performance targets, or SPTs, as measured by predefined KPIs, or key performance indicators. So they can comprise or include external ratings, such as a carbon certification or equivalent metrics. Really, it's looking for measures of improvement in the borrower's sustainability profile. And those were a significant aspect of the sustainability-linked loan for the Sudima Hotels. And an important aspect of sustainable finance and the process is the second party opinion report. So that can be provided by an institution with environmental, social, sustainability expertise that is independent from the borrower. So working alongside BNZ, the lender, and Kanika at Sudima Hotels, the borrower, and referring to these sustainability-linked loan principles, we were able to review and confirm before the execution of the financial instrument that the environmental and social elements of the loan were in line with the overall Sudima Hotel sustainability strategy, so that all important governance was already in place. The metrics and measurement in relation to sustainability performance targets, those SPTs, were appropriate, i.e., they would actually result in the measurement of outcomes and, most importantly, impacts. The targets that were set were suitably ambitious, so they actually ensured Sudima Hotels were going well beyond business as usual. And the reporting of review of performance was going to be both robust and transparent. The things we particularly liked about this sustainability-linked loan were the clear reference and relevance to the overall sustainability strategy of the Sudima Hotels. There were ambitious targets and timeframes, not only for the expected areas of carbon emissions, but also the inclusion of targets for social and cultural performance, and in particular, supply chain engagement. It also includes third-party verification, so TOI2 certification, accessibility tick compliance. So a high level of verification already embedded into the kind of structure of the loan. We also recognize the importance of growing a broader approach to sustainability in the tourism sector, particularly relevant now as Aotearoa is opening its borders to international travelers. So I'm delighted that Kanika joins us today to provide a little bit more detail about the loan, how it will support both sustainable business strategy and sustainability outcomes for Sudima Hotels. So I'll hand over to Kanika to provide her insights, and we'll take some questions at the end. So please use the Q&A function to pose your questions, and I'll run the slides now for you, Kanika.
Hi, my name is Kanika Jhunjhnuwala, and I'm the Executive Director of Sustainability and Environment at Sudima Hotels and Hind Management. So Hind Management is a specialty hotel management brand. So under that umbrella, we have a couple of F&B outlets, some spas, bars, and we also manage and run Sudima Hotels as well as Novotel Christchurch Airport. So the lane is in Christchurch City. It's a restaurant. East is our completely vegetarian Asian fusion restaurant in Auckland. Moss is in Christchurch and Queenstown, and Sunset is in Auckland. So our hotels are spread across the country. We're New Zealand specific. So we're all the way from Auckland all the way down to Queenstown with Kaikoura is our latest hotel. It just opened about 2 weeks ago. So if you're heading down there, just definitely check it out. The way that we started was by looking at what our mission and vision is. And our mission is simple. It's to deliver the most accessible and environmentally friendly hotels throughout Australasia. We'll strive to be industry leaders in social and environmental responsibility. And our purpose is clear. We're here to help you make the most of your day and bring a smile to you, our guests, our people, and our communities. So from that, we were able to form our ESG framework, which was done through quite a long process of engaging with our stakeholders, as well as people within the business, to find out what people really care about and where we need to focus on. And so we came up with these key 5 pillars. So they're Whanaungatanga, our people, Kaitiakitanga, environmental sustainability, Mana Whakarahe, responsible procurement, Manakitanga, authentic experiences, and Ohanga Oranga, ethics and governance. So I feel like ethics and governance is kind of like the overarching one in terms of making sure all of the other ones are accountable, transparent, and that they're material as well. Our SLL commitments, sustainability linked loan commitments, are around our refrigerants. So that's looking at our environmental sustainability as well. So we have a commitment to look at our entire refrigerant asset in all the assets and reduce the liability over the long term. We're also looking at our carbon emissions from the portfolio. So we've aligned some of the targets with science. And then we have one around accessibility tick. So that one is making sure that we are keeping track of how we're doing in the accessibility space, and we're engaging and staying on top of it, and trying to remain as like leaders in the field. Also cultural competency, which is just us lifting our whole entire Te Reo and Te Ao part of what we're offering, because we think it is necessary and it is part of the experience that people get when they come to New Zealand. So why did we do this? We've been on this journey for more than 10 years. So the whole mission and vision and purpose statement that I showed you, that's more than 10 years old, and it hasn't changed. But what's changed is the way that we interact with it and how it's brought us along on our journey. So I don't think sustainability is something that you decide that you're going to do one day and then all of a sudden you're doing it and you're doing it really well. It's something that is, you have to embed it into your whole culture. And that's what we found, that we've been able to build on it, and it's still evolving and it's still growing and it's still building. But because we've been on the journey for so long, we had the opportunity to do the SLL because we actually sent the NZ, our bank, something about, can you please let us know what you think is important as us as a business in terms of the sustainability space? And they were like, you might be the right candidate for this SLL thing, which at that point, I think they'd only done it for like much larger companies. And so then they started looking at how do we integrate that down to like smaller ones. Another reason is because the SLL provides support for initiatives that we want to take forward, and it provides support for the whole ESG aspect of the business. So what I mean by that is that if we meet our targets, we get a discount on our loan. If we do not meet our targets, we're penalized for that. So we actually pay more for our loan. So that just means at that point, suddenly it's like financially critical that we meet all of these targets. And it also provides a lot of accountability, and we're able to market ourselves better and talk about it with just more transparency than we have been in the past, because of the way that it's structured and what we have to report on back to BNZ. So the process was that we worked on our KPIs with BNZ, which was quite a lengthy process. We had to make sure that everything was ambitious. It was material, not only to us as a company, but to us as an industry. So we were looking at what are material issues that other hotels have put out in their reporting. And that was like looking at it globally. It had to be something that we could easily verify, because obviously with the loan and the verification process, if you are verifying certain targets, everything costs money. So we had to make sure that it was something that could be easily verifiable. But I think the hardest part was making sure that it was measurable. And especially with sustainability, when everything is kind of a moving target. When we were setting our refrigerant targets, it was like, oh, it'll be based on the emissions reduction plan, but the emissions reduction plan hasn't come out yet. So maybe the first year we'll just say, look at the emissions reduction plan. And then the second year we set the target. So it was a bit of like, how do we build it in so that it makes sense in the future? Through that process with BNZ. And then we also got ThinkStep involved to do our second party opinion. And they were also really helpful in providing a lot of guidance around that and saying what we need to do and other things that we could think about, and just helping us shape those targets better so that it is something that we could accurately measure and get easily verified. So I think one of the most important things when you're looking at them is to make sure that if there's already things that you're verifying within your business, those are the ones that you try to get first, because you don't have to pay extra for that. And then once we were done and we reached a point where we were happy with the targets and the length of it, so we have a different target set for each and every single year. So the idea is that we incrementally increase our impact in that space. So for each of those 5 SLLs, we'll be kind of going towards a target, like there's a final target and we have like steps towards it. So once all of that was set out and we were happy with it, we had a chat with our lawyers, and there was a lot of paperwork involved and lawyers talking to other lawyers, and then we managed to sign it, and now the hard work begins. It's been quite a process to get everybody understanding what the SLL is and get them on board with what our commitment around it is. It's been a lot easier in the sense that it is connected to a financial instrument. So the CFOs, C-suite, whole entire group is already on board. And I think that's where the accountability and transparency comes in and is a really positive thing about the SLL. And that's all I have for you guys. So if you have any questions, please let us know.
Yeah, thank you for those insights. We'll just go into the Q&A. Elizabeth wants to know, what are your strategies in terms of reducing refrigerant liabilities? And how do you achieve responsible procurement? What does that actually look like?
So for us, first is with the refrigerants is we need to create an accurate baseline of what our refrigerants are. And then we've set a policy in place, and we've started talking to all of our suppliers and the people who manage the refrigerants within our hotels. And we've basically told them, anytime you come to us, you have to come to us with more than one quote. And the first quote can be like, what is normal? And then the second quote can be the better refrigerant. Obviously, refrigerants are a very drastically changing industry right now, because you can't just replace one refrigerant with another refrigerant, and they can't be used just interchangeably. So it's also like kind of trying to plan how we in the future will be changing our refrigerants out as they need replacement. Because we have quite a big portfolio, I think there are going to be a couple of things that are coming to the end of life over the next couple of years while this SLL is in place, which is why we've been able to put that in as well. And then the second half of that, around the responsible procurement, we have a responsible procurement pledge that we've just gone out and gotten a whole bunch of our suppliers to sign. So we decided, instead of looking at responsible procurement from every single angle, we would focus on mainly responsible procurement from a waste perspective. So we're looking mainly at plastic and how to make it a more circular economy, and to make our supply chain more circular. So just in the process of when we started talking about this responsible procurement pledge up until now, even though we signed the loan in like July, we've already gotten some of our suppliers to start taking bottles back. We've gotten a lot of them giving us their credentials around what they do with their responsible procurement as well. So we're trying to create a database and just be more intentional about how we procure.
Cool, thank you. Another question specifically about waste reduction and recycling. Any KPIs focused on those areas in particular? And if so, what sort of international standards or approaches would they be based on?
So for us, it's pretty hard to figure out exactly how much waste is being recycled because we haven't done a waste audit yet. What we've done instead is that we've looked at what data is provided from our suppliers who pick up the waste for us. And so once we get a more accurate waste audit, which we're also going to be doing probably next year at each hotel, then we'll be able to have a better understanding of what that target looks like. But basically, I think at this point, we're thinking zero waste to landfill by 2050, which I know is very late. Maybe we can make it earlier. I hope we can make it earlier. But there's also a bunch of externalities in that because we have no control over what the guests come and put in our rubbish bins. And so it's not only like what we can supply within the hotels, but it's also how do we then educate our guests so that they're also using better things that don't create waste.
Cool, thanks, Kanika. Look, there's far too many questions for us to answer right now. We're almost up to 3:30. I suppose one very brief one from me would be, having gone through the process, would you go through it again?
Yeah, I think it was a really good process because it helped us reshape and rethink the way that we're thinking about sustainability as well. I would say like we were developing a lot of our framework and everything at the same time as we were going through the process. So it ended up stretching out quite a long time. So it took us about a year of back and forth with BNZ before we finalized the targets. But I think it was like a very good process of just helping us to think a bit bigger picture and think about how we can be more sustainable and what is measurable and how do we start building data, because we've been through the process now. There are all of these other facets that we're going to start building data upon, which we haven't in the past.
Cool. Thank you. Thank you so much. Look, we will have to wrap it up there as we're unfortunately out of time. We'll make sure to get back to you and answer any of the outstanding questions. Make sure they're in the Q&A box. Thanks again, Kanika, for sharing your insights with us. If you've any specific topics that you would like us to cover in future webinars, please do let us know. But in the interim, thank you all very much indeed for your attention and participation. And with that, we will close the session. Thank you.
Thank you.